Good evening, everybody. Sorry we're late. Had a new project tonight. Got a new addition to the family out back. Apparently, there's a 7-foot black bear now starting to feed at the corn bin. I've never seen a black bear around here before. We were worried for the cat because we had a fisher in the area. And fishers are a kind of a black mink type animal. Um, and so we say, watch out. There's stronger than bear's breath is right. Yep. So we've always been wary of the fisher because fishers apparently like to eat cats. But just discovered from my neighbor, who didn't know what a fisher was, that his cat apparently grabbed the fisher and he had to bury it a couple of days ago. So that's right. I think she did get a picture of the bear. I don't. Anyways, so new addition to the family. All right. Welcome, everybody. As you can see, today's positive trading uh, that's just part of the family. Um, Today with the positive trading in the Dow, this is still our big predominant uh, reversal signal potential, but this is our trend potential. So we've closed right on the T-line today, doing a bullish harami, but stochastics not having any great direction. So we're either in a slow sideways mode, or if they start selling this off tomorrow, we could be wave one, wave two, going into wave three, especially coming out of this big dumpling top. Marianne, I'm just north of Pittsburgh, about 20 minutes north of Pittsburgh. More compelling, though, was the NASDAQ last Thursday when it did a shooting star and it just touched the 50-day moving average. So at that point, we were saying on Friday, if it opens lower, they're going to be doing some profit taking. Well, the doji that occurred in the NASDAQ was right here basically at the T-line. And so we knew if it opened positive, it was a good possibility they were going to keep it positive. But as we saw near the end of the day, they closed it back right at this level, right here at the T-line, making it the same scenario, that if they open this lower tomorrow, this big shooting star followed by a gap down is in progress. Marianne, you're probably down near my in-laws somewhere, or my sister's in-laws. So anyways, we've got to be watching the pre-market futures tomorrow. If they open lower, kind of expect that this trend, especially after reversing right here at the 50, and then gapping down on Friday, there might be some more force to the downside. Let's see. The transportation index held up reasonably well, but still has that shooting star right here at this little trend channel. So it's once again going to be pretty important to see how they open the markets tomorrow. So some of the right now, crude oil is still having a hard time getting back up above the 50-day moving average. So if it starts just sliding along, notice how we have a T-line crunch, but if they close this back below the T-line again after an evening star signal, pretty much telling us they aren't going to go up through. There's still a good possibility they could bring it right back down into that trend channel. Oh, Danny, I moved out of the Woodlands about 2 years ago. Still have a house down in that area. Just moved up here. Some of the other things that we've got is gold. Gold having a little bit of a tough time. Wouldn't be surprised to see if it doesn't consolidate back to the T-line. But it should be in an uptrend after the cradle pattern. So if I was buying gold, I would definitely have a buy stop just above today's open. If it comes back up through there, that tells us this cradle pattern followed by a doji sandwich was continuing our upside. The Treasury notes, things are a little bit slow here tonight. What's going on? Treasury's just sideways, no trend. So obviously there's not going to be any change of interest rates here in the near term. Soybeans also kind of rolling over. Popped up yesterday. Looks like it's trading down a little bit. Another one that can be shorted, especially if it comes back down through today's open. This is the after hours trading right now. If it started coming back off, you essentially have your bearish J-hook pattern in progress. I was trading live cattle. I was short, and then today it gapped up above the previous day's open and traded positive. Came back down to the lower end of the range. However, I'm still holding those long positions on the basis that we're in the oversold area. We've had a gap up. If they open this positive, what type of signal do we have potentially setting up or should be setting up? Anybody? Yeah, flutter kicker signal, right? It opens positive. It's going to move in the direction of how they open it after a doji. They moved it positive and you took out this little flutter, you'd essentially have a kicker signal. Glenn, we'll get to all the individual ones. Don't worry, I'm probably have them built into the presentation tonight. All right, let's see. We did gold, silver, dollar. Well, this is not working out well with it. Everything's so slow for some reason. Dollar picking up some steam ever since the long-legged bullish Harami gap up today through the T-line. I would suspect there's going to be a bounce back up to the 50-day moving average. Oops, that's not what we want to do. DUAZ5. Euro looks like it's coming down to the 50-day moving average. Let's see, what else have we been trading? Oh, cotton. Been short cotton. So we've got the bearish J-hook pattern, and even though we're in the oversold area, now we've got a very good trade setup. If it opens positive, it's probably bouncing up to the T-line. If it opens negative, you got a bearish doji sandwich, which means wave 1, wave 2, wave 3 will be in progress. And I guess that's about it. Coffee's been kind of sideways here recently. Nothing to trade there. All right, some of the stocks this weekend, I was given a session with Jeff Gibby of Metastock over in Washington and Philadelphia. And I guess the most requested information was the different patterns. And basically, we've got the advantage of having the visuals and knowing what should happen after one of our signals, like your best friend signal and our TRVN. You know that we can just stay long on this 45 degree as long as it stays above the T line. Another chart that looks the same ASNA, big move to the upside. Look for a 45 degree to come off of here. So if you just remember these type of things, and first of all, if you just remember the rules of candlesticks, that the bigger the signal, the more compelling there's been a change of investor sentiment. And usually after that big signal, that's where you get that steady 45 degree afterwards. Still like WTW, basically because what started this next uptrend? Kicker signal, our strongest signal. So if this is wave 1, this is wave 2, wave 3 should be somewhere up in the range of 7.5, maybe as high as $8. We recommended AKBA, and this is also part of investing, is we were buying it on the basis, or looking to buy it on the basis that there's a J-hook pattern setting up. Then today, when it closed back, if you bought it on positive trading today, this is one of those type of days where when they closed it more than halfway down the candle that told us the bulls are starting to take control, you close it out, because what did it do to our J-hook trajectory? Disappeared. So right now all we have is a sideways. So we don't, at this point, with stochastics like this, instead of the chart going like this, we don't know whether it's going up, down, or sideways. Oops, I just lost the chat. I'm back here. All right. Okay, I'll show the waves. And let me get to a chart that has waves again. So anyways, this is one of those situations where if you're buying because of the positive trading today, making the J-hook pattern, when it closed down here, close it back out. Now, I know the toughest thing for me had always been, man, I hate just that slap on the side of the head that everything looked good. I was buying. At the end of the day, I've got to close it out. Well, maybe I'll just hold it one more day and see if they take it right back up and do the pattern I thought they would. I've learned that once the pattern disappears, close out the position. There's dozens and dozens of other trades out there versus staying in one where it doesn't have anything that compels you to stay in it because there's no pattern anymore. And that same scenario was with CUDA today. CUDA had a nice fry pan bottom and it should have been breaking out. So if you bought it on positive trading, which I didn't do today because it wasn't trading real positive, if you bought it and it closed back down here, now this is one that you can be more apt to say, all right, I'll stay in it, but it has to open positive and trade positive. And the reason I say you can stay in it is anytime you see a fry pan bottom setting up, I mean, that's not a one-day force. That's a big force that's been developing over the last few months. You just stay long as it stays above the T-line. So tomorrow, to stay in this one has to open positive and trade positive to stay in it. Okay, things like Kara had to stay above the T-line. You got the fry pan bottom. It had to close above the T-line, but it did close right on the T-line with a bearish engulfing signal. Stochastic's getting close enough to the overbought area to say this one has to open positive and trade positive tomorrow to stay in it. So yeah, I think from what the information was in the chat room that was it Hillary came out and said something that kind of knocked down the bios today. So here's that same scenario. An RXDX with a big fry pan bottom. You have a bearish dark cloud, but you haven't closed below the T-line. So you still have two criteria that should keep you long until you see more weakness. One, that you're in a fry pan bottom, and two, you haven't closed below the T-line. So tomorrow, this has to open positive and trade positive. That's right. Is that a belt hold at the bottom? You can consider that a belt hold, yes. It's not a huge belt hold, but it's enough that if you want to call it a belt hold, at least you know that it's a piercing signal, where it opened below the previous day's trading, not just the previous day's body, but the previous day's trading, and closed more than halfway up this candle. Well, I guess Hillary's telling us now that she's kind of an outsider. Now here's the type of patterns that we like to find. There's your little slow curve, and there's your breakout. So these are the ones that if you start seeing moving pretty big, breaking out, if you catch them soon enough, you can make some good profits. Now, when do you know when to get in and when to get out of these type of trades? Let's see, RDX. Let me go backtrack a little bit here. RXDX. Place a stop at today's close. You could do that. If it came back down through there, you know it's still heading down. You could do it at the T-line. So we know we have a sell signal, a potential sell signal, a dark cloud. We know if we see further confirmation, we should be out of this trade. But we also know that it's still above the T-line. So worst case scenario would be if it came back down through the T-line, you close it out. If it comes down and then comes back up through the T-line, you can always buy it back right about where you got out. But at least that when you bought it back, you knew the price was moving in this direction versus holding something that was moving in this direction. That's the hard part, to catch the big move early. So that's the benefit of having the chat room, because we did that the other day in CANF. Because what was this telling us? We had a doji gap up, your best friend. So when was it time to be buying? That's where you go to your 10-minute chart. Let's see, which one was it? I guess it was here. There was that gap up. When was it time to be buying? Well, if you watch your 10-minute chart and it's staying above the T-line, I might not have bought here, and I definitely wouldn't have bought here, but I might have bought here because that told me they were still staying above the T-line. Same scenario for the next day. They gapped it up again. They couldn't close it below the T-line. So here on your 10-minute chart, this is why the candlesticks have a lot more graphics than or graphic information than the other charting technique. Because notice what was happening here. Notice what was happening in these candles. They were all green candles. And we just moved from this stock from the 150 area, and it was trading up to. So what do you expect to happen at some point in time if they're not blasting this through the roof, still blasting it through the roof? At some point there's going to be profit taking. So when it opened here and started trading positive, if it came back down through here, what type of candle would it be telling us? It would be telling us that finally there's sellers coming in here. So I think we took profits right about in here. I was a little bit late only because we were demonstrating what to do. And where was the support going to be? Somewhere down here. Came back up, didn't confirm though, and been selling off ever since then. But so this was just kind of, if you cut the chart off right here, you could be buying in here, knowing that they haven't sold yet. You could be buying in here, and this is where you've had the first signs of selling, where your candle finally turned red. Because where would you think they'd be taking it to once they started the profit taking? The first target was the T-line. If you held on to it, the next candle told you when they closed below the T-line, you definitely should be out of this trade. So that's just how kind of now, do I get in at the absolute bottom or sell at the absolute top? Definitely not. But if I can keep hitting high profit trades with a high correct trade ratio, the compounding effect is very nice to live with. Okay, so let's go back to the on VBLT. Did we do that one yet? It's on here. So again, even if you were holding this at the end of the day, what's your long-legged doji tell you? There's lots of indecision. What's our rule of thumb? It's going to move in the direction on where it, how it opens the next day. As you can see, if they open it lower and started taking it down. Do you continue to watch this for a few days to see new buying? Yeah, I don't throw it off my chart. I just see if there's something that tells me the profit taking's over and the buying comes back in. Is it too extended on VBLT? For yes. So if you were going to be trading it, once again, you go to your 10-minute chart. If it opened positive tomorrow, you can stay long, but you just make sure that it stays above the T line. If it turns around and comes below the T line, what can you expect? There's profit taking. Why would you expect profit taking? Because the stock just ran from 5 to 8 and trading higher after that. So what's anticipated? The further away you move from the T line, the higher the probability you're going to start seeing some profit taking. INFI was one that we got into today because it did a trend kicker signal. So if you analyze this whole chart, this is why I was not too worried at the end of the day when it was coming back down to the end of the trading range, or the lower end of the trading range, because what were we buying? We were buying a pattern, the fry pan bottom, that broke out above the 50. What is today? Monday. On Friday, came back, used the 50 as support. I say it used the 50 as support. Where did they close it? They closed it right smack dab on the 50. And then what did they do today? They did a trend kicker signal. So what do we expect coming out of a fry pan bottom? We're looking for them to break it out. What's one of your strongest signals? A kicker signal or a trend kicker signal. So if this opens positive tomorrow, you can still be buying because that tells you the profit taking that occurred today is over. They're still buying the pattern that we can recognize. All right. Good for you, John. And so that same type of setup was in VTAE. Same scenario. We can see there's kind of a J-hook pattern setting up. Did profit taking, but if they open this positive tomorrow, more than likely the profit taking's over. They're going to continue to take it up. Okay, some others that looked decent today. TDU. There's your kind of your little best friend gap up. Where do you think the next target will be? Probably the 50-day moving average, right about where they gapped it down. If they break through there, your next target is the 200, or right in this area where the gap started. If INFI opens negative, then it will take, like I was talking about, they would taking it down. Probably, yes. So that's why, oh, pshaw. If it opened lower tomorrow, what's it not doing? It's not breaking out. More than likely, it's coming back to the 50 or the T line. Is it going to stop there? I have no idea. But why risk? We know that we can always watch it to see what it does once it gets back to the T line and see if it's doing a little cup and handle. Pandora. Oops, I don't have the volume on here, but there's your fry pan bottom. Where do we want to see a breakout occur? Right as the fry pan bottom ends. What happened today? They had a nice percent move plus huge volume. So right at the breakout area of a fry pan bottom, they had huge volume and a big move. I told you there's a new dynamic in that stock. You probably want to keep this on your watch list. If it opens positive tomorrow, you want to be buying. Oh, it's halted twice? All right. Thank you, Sam. So those fry pan bottoms What are you looking for coming out the other side? This is TWOU, 2U. And what type of signals do we have here? First of all, we have a little Morningstar signal. We can see the fry pan bottom. Now we're having kind of a doji sandwich breaking out into new territory. And what do we know about a doji sandwich? There's usually more upside. So if the doji sandwich says there's more upside, and we're coming out of a fry pan bottom that says there's going to be more upside, it's a very simple trade. If it starts trading positive, you can be buying this one. And another one with the same type of chart setup, ETSY, ETSY, is coming out of a fry pan bottom. Notice how the candles are starting to get bigger again. Makes this very simple. If they open this positive and start trading positive, they're breaking through the 50. We've already broken this downtrending channel with a fry pan bottom. This one could, this is, and this one has some running room. This is the area where things are going to start happening coming out of a fry pan bottom. That's where the exuberance starts coming into to these trades. The bios got hit today. But this one held up pretty good. GNCA. Little doji gap up. Closed right on the T-line. Then opened positive. Backed off a little bit, but closed above the T-line. So you've broken this downward trend channel. Another one that you could be buying on the basis that if it opens positive, it's confirming this whole setup and is telling you the 200 is not going to act as resistance. I think I've got VTL on here. This bigger. Nothing bad here. Uh-oh, that's not what I want to do. That's not. Got the fry pan bottom. You broke through the T-line, came back, used the T-line as support today. Another one that you can be buying on positive trading tomorrow. And if it gets running, now the reason this one looks good, because you got a fry pan bottom setting up, and there's your next upside target. So you could go pretty much from $3 back up to the $12 area. Air Lease, there's your fry pan bottom. There's your trend kicker signal. This one can be bought on positive trading tomorrow. And SGY, you can see the big fry pan bottom. You can see the little bobble. Also can see that it closed right on the 50, using the T-line as support. Makes this very simple. If it opens positive tomorrow, you want to be buying, because that means the 50 is not acting as resistance. Your fry pan bottom is breaking out. Good possibility they could take this back up into the 200-day moving average area. Cyber did a gap up today. Bullish setup. Then they gapped it up. Makes it very simple. They open it positive, doji sandwich. They're eventually going to get up here into this area, which also fills the gap over here. And QIHU made some good money on the bearish J-hook pattern. Then we saw the doji's best friend gap up. Now you have a doji sandwich. That's telling you there's a lot of bullish strength. I would expect it to come back up into the moving average area. So I can see these are the potential target, and I can see there's been a strong trend. This is where you just go and you put your Fibonacci retracement number on and see what other targets there might be. So there's your 38, there's your 50, and there's your 62, which coincides with the 50 probably being here in the next few days. So those are potential targets. Is that where it's going to go? One of those targets? I have no idea. Whoops. But that's what you keep an eye on to see what happens. If you start seeing some sell signals, you at least know what type of signals or what type of area to start watching for the reversal signals. Mario, yes. It doesn't matter what you hear. All the news that are incorporated to any stock, market, sector, anything is already built in. Whenever the news comes out, you still watch to see what the investor sentiment is. Stochastics, yeah, the stochastics on QIHU just come up out of the oversold area. Whoops, working well. So I wouldn't be afraid to be buying this one on positive trading tomorrow. Now, that's also probably going to be a function of how the market opens tomorrow. If the market, we wake up and the pre-market futures on the Dow are down 100 points, we might hold off a little bit or just watch to see if there's continued strength. Foghorn, yes, I'm usually 100% invested, not necessarily long or short, usually a combination of both. But there are times where it's not worth trying to trade. For example, as you can see what the market was over the summer. Let me make this a little bigger, smaller. And it was hard to trade this market all summer long. So if you saw a lot of my comments, which was, you can't trade this market. Go fishing, go play golf. But get ready for this type of move because we know what to expect coming out of that dumpling top. This big rounding top usually creates a big strong move to the downside. Just like a fry pan bottom breaking out creates a very strong move to the upside. Let's see, what else do we got here? ACTG is something that was a nice little fry pan bottom on this one. After an inverted hammer, left-right combo, this gets running. We've got another 15, 20% to the upside on this one. And AERI is one to want to illustrate that the fry pan bottom did work. What do we expect after a fry pan bottom? A big price move. Then when you have your big price move, now you go into your next phase of analysis. What should this be doing? Profit taking should be over and it should be heading up. So when this backed off, what do we want to see the next day? Indecisive. Well, the fact that they brought it back down through the low of the previous day told me, all right, the buyers aren't there yet. They opened up positive today, but it didn't finish positive. So if I was had held on to it here, I would have definitely been out when it came back below the low of this day because it told me the buyers aren't there yet. They probably are going to come back in, but I don't know whether they're going to come in here or here. So close out the position and just wait for your next candlestick buy signal, whether it's off a daily or off a 10-minute chart. And ANF. Uh-oh. ANF. Nice little J-hook pattern. Expect it to come up, at least test the 200. Let's see, we did AERI, we did see ANF. So, all right, and those were some of the biggies. Netflix, that did a left-right combo. And where did it do it? After it kind of failed this downtrending channel. So this is why you got to be a little bit cautious of the market, because if this market opens lower tomorrow, and breaks this downtrending support level, especially if they open it lower and come back through today's low or on Friday's close, it tells you the evening star or the shooting star and evening star pattern are still working. It tells you this trend isn't holding anymore. We could be in another downdraft. That's why you see my comments every day is that you probably want to have both long and short positions in your portfolio. Apple, still wouldn't trade Apple because there's really no great direction to it. There's nothing here to tell you there's any major signal that you would want to be long or short. Now Amazon has held up well. Now this is a pattern that tells you which way they're going. Ever since the Morningstar signal off the 50, you knew that this bounce was still in progress, and all you can do right now is stay long on this one until you see a sell signal and a close back below the T line. Google, as long as it stays above the T line, you can stay with it. And what are some of the other ones? Netflix, Apple, Netflix, Amazon. We'll get to G Pro. Let's see. Yeah, I'll get to the personal or the individual ones after I tell Jim to do the double line. When you say your 10 positions are the same size, does that mean dollar size or share size? Now dollar size, because what are we concerned about? We're concerned about our dollars. So that might mean I have 1,000 shares of $50 stock and 10,000 shares of a $5 stock. I want each position to be weighted exactly the same dollar-wise. And the major reason for that is, what's our biggest weakness when we're investing? Our own emotions. So if I can keep each position equal, then I know that I'm just trading each unit and not trading one of my favorites because I'm smarter than everybody else and I picked out a great one. And I was telling the sessions over the weekend that if you normally put $50,000 in a position and then all of a sudden you buy one for $120,000, you can bet your sweet bippy that you're going to spend 90% of your time watching that $120,000 and the rest of your portfolio is only going to get 10% of your attention. So I keep each position the same dollar amount because if it's a position that I think is the greatest one in the world isn't working, now I can rationally say I need to close this unit and move on to something else. Yes, I bought puts on AMBA today. G-Pro has a nice bearish J-hook pattern, hasn't been able to get back up above the T-line. AMBA, we bought the puts today because there's your bullish or your bearish Harami right smack dab on the T-line, and they open it lower. That tells you they're not going up. They're still heading down, also a bearish J-hook pattern. Another one of the biggies, Tesla. As long as it stays above the T-line right now, it's broken this downward trend channel. As long as now you've also done a doji, a big long-legged doji with the stochastics in the overbought area. Just be careful. If it opens lower, I'd probably take some profits with the anticipation they're bringing it back down to the T-line one more time. And Twitter, I wouldn't be long or short. As you can see, there's really no direction right now. If I had been long after the left-right, or looking to go long after the left-right combo, it better open positive and start trading positive. I'd rather pay up for something after a buy signal than try to get in too early and then be sitting with it for another 2, 3, 5, 10 days. With those volumes, you move the market. Now, it all depends on what I'm buying. No matter what size portfolio you're trading, and you're making your each unit or each dollar amount unit the same. Obviously, if you're trading big money and each one of your positions is $80,000, you better buy $5 stocks that are trading 700, a million, 2 million shares a day. Obviously, you don't want to be buying a $5 stock that only trades 200 1,000 shares a day, because if you're in there buying 15,000 shares, you're buying a good percentage of that volume that day. And there's just too many opportunities or too many charts that look good that you don't have to buy something that's going to put a restriction on you for either getting in or getting out at the appropriate time. What's the projected target on AMBA? I don't know. I figure if this was the recent wave from 95 to 65, maybe they could take this down into the $35 area. You apparently misread it, because I think there's enough interest in the stock that there's a lot of interest in the options, or there's enough volume in the options. As a rule of candlestick trading, do we trade when we see the candle pattern or above the T line, or wait till the certain fry pan bottom is completed, or the J hook completion, or all of them? Henry, you're buying based upon the pattern. You're buying on all of them. Sometimes you got to use a little bit of analysis that if the market is skyrocketing and you see a stock that's selling off, you might not want to have your money there because that's going against the tide. You might move your money into a good pattern that everything's setting up on the bullish side, or vice versa. If a stock's going up in a down market, you're probably more apt to look for the patterns that are heading down. Okay, let me get some more done here. Went through the longs, the shorts. We recommended shorting Caesars, because what did it do when it got to the 200? Hanging man, bearish engulfing signal, closed below the T line. Where's the next likely target? It'd probably come all the way back down and test the 50-day moving average. Yes, I'm still short AMBA. There's nothing here that told us that there was any change. I would suspect that AMBA could be a wave 3 in progress, bringing you all the way down into this area someplace. When, same scenario. You're below the T line. They can't seem to stay up above the T line. You just stay short on this one. Now G-Pro, we looked at already. Nice bearish J-hook pattern. And that's why we're short AMBA. Bearish J-hook pattern with a bearish Harami gap down. We know the worst case scenario is they will probably come down and test this level. All right, so if it bounces up there from there, I can get out of the position, probably have a good little profit. If it breaks this level, I've got some big profit potential on the short side. And WTF, there's your doji gap down. And this is why I keep telling people, when you see something, a sell signal and a close below the T line, close it out. You can always buy it back if it comes back up there, but anytime you close below the T line after a sell signal, the probabilities are so much against you that you don't want to risk it. Is there going to be a time where you close it out and it turns right around without you? Yes, but for every time it does that, you're probably going to be happier than a pig in doo-doo that you got out at the right time. For every time it goes back up, you probably have 8 or 9 times where it goes in the direction that it shouldn't be going. You should be out of that position. T-Pub. Notice a little slow curve, kind of the rounding top, doji gap down. That tells me there's going to be more downside. IMGN is a perfect example. That's not IMGN, that's INGN. That's still a good example of getting ready to go short on something. But IMGN, remember, the bigger the signal, the more compelling there's been a change. Harami, bearish Harami, right back to the below the 50, at the T line, there's only one thing it had to do was open positive and trade positive. When it gapped down, that's a very good indication that you want to be out of that as fast as possible if you're long and or ready to go short. DXAS is a good example of that. There's your big long-legged doji. We know what happens after a big long-legged doji. It's indecision. But if it opens lower, you want to close out the position. Where was it going to move back to? Probably at least the T-line. At least the T-line. We're not sure if it's going to support there or not. Why risk it? We know the simple rule of the doji. That it's going to move in the direction how they open it after a doji. Rare was a good example of the bigger the signal, the more compelling there's going to be some more selling. Where's the likely target? Well, you can pretty much draw a line down through the bottoms, which takes you right down here to the 200-day moving average. Remember, the bigger that signal, the more compelling that there's been a change of investor sentiment. QURE, big, huge reversal. This one you get ready to go short. Just start watching to see what the support level is going to be. So I was demonstrating the T-line crunch to people over the weekend. Notice how ACAD had a crunch, but notice also where you are with your stochastics. This is why I always recommend that if you're in the overbought condition, you've got a bullish trend, very simply, put your stop at the previous day's open. If it comes back down through there, something's wrong with that uptrend, especially if you're in the overbought condition. The same scenario with Juno. Had a T-line crunch. We were right here at the 50. Very simply, put your stop at the previous day's open. At least you knew that if it came through there, it was going to come back and probably test the T-line. You could always see what to do at that point. I think this is Flamel. Big bearish engulfing signal. Expect the 200-day moving average to be the next target. I was long LXRX, but then Friday they gapped it down and did a doji. Where? Below the previous day's open. Should have been out of this position. I was giving it one more day to see whether the fry pan bottom type pattern, so they needed to open it positive. When they opened it lower today and started trading it down, closed out the position. Now what type of pattern do we have? Now we have a bearish flutter kicker signal. So we can take that flutter out of there, the doji. More than likely, they've got some strong selling going on in this one right now. Let's see. MNK. There's your little slow curve. Stay short. EFOI. Had a good-looking chart until you started seeing gap ups. And remember, anytime you see a gap up in the overbought condition, very simple rule. Start looking for a sell signal. There's your tweezer top. Now, your tweezer top is where they traded right at the same exact level and started selling off. You can see how there's a little tweezer there. But when it closed below the T-line, you should have been out of the position. If it closed right on the T-line and had been using it, the T-line for support, yeah, you could give it another day. But if it closes below the T-line on a big selling, this is why you don't want to hang on to it, just for that reason. Not only should you have been out, you should have been looking to go short. And right now, you could still be short. You might have shorted it down here, but as you can see, this big reversal is still in progress. Where is it likely to go? Somebody said the other day, don't all gaps get filled? They do eventually. But this one might not get filled for, this gap right here may not have gotten filled for 2 months, 6 months, 2 years. Now it looks like that's the next target, coming back down to fill the gap. Does the 12 major signals always require overbought and oversold conditions? You prefer them to be in there. Obviously, from what the Japanese rice traders say, if you see a candlestick buy signal in the oversold condition, there's more than likely there's been a reversal. A candlestick buy signal in the overbought condition doesn't really mean all that much. Same scenario with the sell signal. If you see a candlestick sell signal in the oversold condition, it doesn't mean very much. But if you see a sell signal in an overbought condition, it has a lot more meaning. So just because you have a formation that looks like a candlestick signal, it's not a signal unless it's occurring in the right conditions of a of the trend, where buy signals need to occur in overbought or oversold conditions. Sell signals need to occur in overbought conditions. Now, as far as patterns, that's a different story. Usually the patterns are going to break out when they've already moved to the overbought or oversold condition. So this is EFOI. This one is Bluebird, big bearish engulfing signal. What's it pretty much telling us? If this downtrending channel is still in progress, where's the next target? Probably draw a line down through the bottoms, bring you down into this area. Let's see, Radis, bearish engulfing signal, close below the T-line. I'd get ready to short this one on weakness with the anticipation they could come back down to the 200. CLDX, was this the one that went to new symbol today? Another one that if it opens lower, you want to be short. CLVS, same scenario, big bearish engulfing closing just below the T-line. If this opens lower, they could be bringing it all the way back down to the 50-day moving average. And AGIO, big bearish engulfing signal. What's more compelling about the signal? Not only are you in the overbought condition, but look where it occurred, right smack dab on the 50-day moving average. So the benefit of candlestick analysis is that we can see what's going on in investor sentiment where everybody else is watching. And I always tell people, or somebody was asking me the other day, how many days does it take for you to confirm that you're in a reversal? Well, the answer is 0. If I see a sell signal and it confirms that signal the next day, you can be buying or shorting it immediately. John, yes, these sessions are always recorded. For options, does open interest update just on a daily basis versus volume? That I don't know, but you can pretty well assess that if the stock is trading 2.3 million shares a day, there's enough options out there to keep you supplied. On the other hand, if a stock is trading maybe 230,000 shares a day, maybe you're going to have a little bit more lack of liquidity in the options. But unless you're going in and buying 50 or 100 options at a time, if you're buying 3, 5, 10, 15 or so, you're going to always get probably a fill. And you can also tell whether the option has good volume by what the bid-ask spread is. For example, in Apple, your bid-ask spread is very, very small because there's so much being traded constantly. Whereas another one, they might be bidding $1, asking $1.80. It pretty much tells you there's not too much liquidity there. So if you really like it, you put your bid in at $1.40 or $1.45. Okay, I guess that's about all I got. So right now, the important criteria is to watch how they open this market tomorrow. Let me see if I can see real quickly what the pre-market futures, the lambs are down 17 at this point. Now the double line isn't drawn yet. So first question we usually ask is, anybody got any General questions on candlesticks. You bought paper traded options on PRT on 9/14. All right, right about in here. All right. No, other than the fact that as soon as you start getting up in the overbought area, start telling yourself, if it comes back through this level, I want to close out the position. Time to feed the bear. That's right. Oh, Ella, the closer you are to the T line, the more you want to decide to close it at the T lines. Notice how this uptrend really didn't move too far away from the T line. Now, over here, we did move a good distance away, so I might take my profits here and get back in, but then get back out. But just very simply, the further away you move from the T line, the higher the probability you're going to move back up to the T line. So there's our inverted hammer in the oversold condition, opening positive. What's our simple rule? We want to buy, we want to see a candlestick buy signal will close above the T line. But we're still a good distance away from the T line. So it doesn't hurt to be buying the signal and then see what it does once it gets to the T line. On the other hand, if you're very close to the T line and you see a buy signal, you probably just wait for it to close above the T line. Abe sent the links for Metastock. Danny, there's I think Metastock or Thinkorswim has a whole set of our formulas over there. So if it opens positive, look for up trades with buy signals. If it opens negative, look to do shorts. Well, it depends on what if you're is that confirming a buy signal, yes, you want to be buying. If it's confirming a short position, you want to be going short. And in a market that's choppy, you might have 5 longs and 5 short positions. If the market's in an uptrend, I'm usually long 8, 9 long positions, maybe have 1 or 2 short positions on. Wannabe, yes, it was all because of a tweet supposedly. Shyam, these charts I don't recommend. These are CQG. I use these because the graphics are good. There's other charts that have good graphics. I just trade lots of things off these charts live, like commodities, currencies, so I can get them all here. And unfortunately, this service costs about $1,000 a month. But things like charts on Thinkorswim or TradeStation, I think they basically are free just by having an account there. The T-line is the 8 exponential moving average. Let's see. No, you want to see what the market is doing on an open. There's just real quickly, there's 4 criteria. If the stock is opening positive and the market is still heading up, opening positive like you think it should be, you can buy pretty quick. If the market is heading up and the stock that you're looking at to confirm a buy signal opens lower, you don't have to buy it just yet. But if it then starts moving back up through the previous day's close, which means there's another bullish candle being formed, you can buy it then. If a stock opens higher and the market is opening lower, you don't have to jump in right away. You just kind of watch to see if that stock's still going to continue higher, even though the market's selling off. And if the market opens lower and the stock opens lower, you don't do anything. That means they're not buying that day. I still need to understand how to choose the best strikes. So far, I think I can see how the 50, 200, and T-line can be used. Other than that, Mario, that's a whole nother session. We'll do an option night here pretty soon. I say pretty soon. It's starting to get cold at night, so can't stay out with the cars or the bears. What do you mean by the market? Oh, just the indexes, the market in general, the Dow, the S&P 500, the NASDAQ, all showing that things are moving in general in one direction or the other. Okay, with that, Jim, go ahead and do the double line. And try to keep your request to 1 or 2. In 2.1 seconds, Jim, do the second double line. Okay, MYGN. That one opened positive day, which it had to do after the sell signal. So if you didn't close it here, it better stay above the T line tomorrow. If it opens weaker tomorrow and trades down, then your sell signal is still in progress. So it has to stay above the T line to stay with it. All right, Steve, good. Oops, scrolled right past me. Zyop. Zyop, you got a potential of a dark cloud, but remember your dark cloud had to close more than halfway down this candle. Now, if it did open lower tomorrow, I'd keep an eye on it just to see if they're bringing it back down to the T line and bouncing from there. But as of right now, you stay long. U.S. Steel, stay short. As you can see, they can't get this back up above the T line. Win hasn't, it's trying to. I still wouldn't buy it. To buy this one, you definitely need to see bullish confirmation tomorrow. And if it did open positive, then you immediately use the T line as your stop. Shouldn't come back down through that. TZA, another one that's just getting ready. It needs to see bullish confirmation. The Russell, still kind of sideways. So even if the indexes stay above the T line, you can see what the trajectory is. It's still kind of slow, and it's back into its nature of being up, down, still kind of indecisive trading. What else do we have here? The Qs. Qs, same scenario. They came right back to the T-line area. It's going to move in the direction, or the markets are going to move in the direction of how they open tomorrow. So watch to see what the pre-market futures are telling you. UNG, natural gas, broke down. There's your bearish Harami gap down. So that told you the fry pan bottom wasn't working. So when do you get out of a fry pan bottom? When it closes back below the T-line. Hot. Stay short. You got Doji, Hanging Man, Doji, Shooting Star, gap down. They're back below the T-line. I would suspect here's your major trend. They could bring it back down at least to test the lows, especially if they open this market lower tomorrow. EXPD, get a bullish Harami right on the 200-day moving average, but you're not quite in the oversold area, so continue to watch. If I was short, or if I was going short, I'd be shorting if it came back down through today's open. If I was short, if it opened positive tomorrow, I'd probably close it out and then just see what it does once it hits the 50. PVH, that's so sideways, I probably wouldn't be long or short. Plus, once it does move, it doesn't have any great magnitude of return to it. Nat, you stay long on this one. You're still in the J-hook pattern. It did a doji today, and you're in the overbought condition. So if it started trading off, especially coming back through today's low, I'd probably take my profits and then see if it comes back down to the T-line. And again, that's also going to be a function of what are the pre-market futures telling us. PBYI, another one that has gone back below the T line. Notice you had a whole series of indecisive trading. Now they've told you which way they're going to go. I'd be out of this, but I just watched to see what it does once it gets down to the 50-day moving average. BIS, your ultra short NASDAQ biotechs, don't need to stay long as it tried to break this downtrending channel, which means if they trade in positive tomorrow, your biotechs are still selling off. RAS, just stay long. I wouldn't be surprised if they don't come back and test the 50 one more time. RSO, another one where you can just stay long so you see a sell signal. LCI, big bearish engulfing signal. Get ready to short this one on weakness with the anticipation they could come back down here to fill this gap. And Guild, be ready to short this one. Notice where your long or your doji failed right here at the 50 with a gap down. They could bring this all the way back down here. My first target would be this area right in here. So at least if you started shorting it, you'd have a little bit of running room. And Whiting just barely stayed above the T-line today, doing an inverted hammer type signal. So it can still be bought. You can see there's a little trend channel right here. It's broken the major downward trend channel. It's still just kind of waffling until they can break out through the 50, or even if they popped it up to the 50. You want to see it get through. Otherwise, you could be moving sideways waiting for the 50 to catch up. BIOS, stay long. But again, you're up in the overbought condition. Just watch to see how they open this tomorrow. RPRX, just stay long. Use the T-line as your stop, or watch. Keep an eye on the 200 Cyber. If it opens positive tomorrow, you can be buying this one. AutoZone is just sideways. I wouldn't be long or short this one right now. ExxonMobil, same scenario. I wouldn't be long or short here. You can see that you're in a slow downtrend, and now you're in a sideways trend. JP Morgan, at best, I'd be short if it opened weaker tomorrow. You've got your bearish signal. You're right here on the support level. If it opened lower and started trading lower, especially through yesterday's or Friday's close, you want to be going short on this one. You had that bearish engulfing signal followed by a gap down. Southwest, just stay long as it stays above the T-line. You can see you're kind of in a little bobble at this point, or a T-line crunch. PBT. Oh. You stay long. I'm anticipating they're paying a decent dividend. So if I was buying up for that dividend yield, I wouldn't be afraid to be staying long in here as long as it stays above the T-line. Bud, kicker signal to the downside. Get ready to short this one on weakness. Notice how they opened it here, closed it here. They gapped it down below the previous low, and not only gapped it down and went the opposite direction, but closed it below the T-line. And AGI, another bearish signal. Just watch to see whether the trend holds. If not, we're probably bringing this back to the 50. And ALK, just stay long as this stays above the T-line. Intel's a hard one to trade because it doesn't move very much because of it being an institutional trader. At this point, I probably would be out of it from this move. Wouldn't be back in it until it gets above the T-line, and probably wouldn't short it until it goes back below the 50. And GE, another one that's hard to trade because it doesn't move very much. I really wouldn't be long or short this one. FTR, stay short if you can. I guess you can't short it now, but you shouldn't be in it at all. Facebook, stay long, as long as it stays above the T line. GM, CR, we were ready to short this one, had it opened weaker today. And we'll still short this one if it opens weaker tomorrow, because you have kind of an evening star, a bearish engulfing signal. They took it up today and failed right at the T line. Stochastics are heading down. If they open this weaker tomorrow, you can see what the trend is doing. They're still in a downtrend, not able to get back up above the 50-day moving average. CLBS, yeah, make sure your volume is good on this one. You could be buying this one on positive trading going into wave 3 tomorrow. And XCRA, nothing here yet. It's sideways. You have an inverted hammer bullish confirmation. I'd be more apt to buy it knowing that it closed up above the moving average. Whiting, we're still watching this. Our long-term accounts will be ready to buy this if it can get back up through the 50. And Ford's still in this wedge. I'd rather pay $2 for it knowing that it broke out through the recent high. That would get things running again. Monsanto, we've had short in some of our bigger accounts for a while. We closed it out, and then we re-shorted it over here because notice what this signal is right here. That's not a signal. That's just a bounce. So you can see what the downtrend is doing. So we're still looking for it to come to the bottom of the trend channel down here someplace. AQXP, still caught in the sideways. It needed to open positive and trade positive today, and it didn't. If it opens lower tomorrow, you definitely want to be out of this one. CGNX, bearish engulfing. Get ready to short this one on weakness tomorrow. EGREX, same scenario. Get ready to short this one on any weaker trading tomorrow. McDonald's, another one that I don't ever trade because it's an institutional trader, and you can see that the overall trend is sideways. There's not enough movement on this one to make it worthwhile. I'd be trading something else that has a definite trend to it. CRUS, get ready to short this one. That's a good-looking short. And ATVI, stay long on this one. You're in the overbought condition, so just put your stop at today's open. MEI, you can stay long on this one, but it better break out pretty soon. Otherwise, you're still caught sideways. So if this opened lower tomorrow, I'd probably close it out. Then you could always just put a buy stop up here somewhere, because once it does break through there, now you know there's going to be some activity in it. Under Armour, stay long as it stays above the T line. VIX, stay short until you see a buy signal and a close back up above the T line. Microsoft, never trade this because it's got stock out there. It never moves around very much. I probably wouldn't be long. If you'd like it, you can stay long, but I wouldn't be long or short this stock right now. Just not a moving chart. And BPT, this one, you still watch for buy signal. I'm pretty sure this pays pretty close to a 10% dividend. So you definitely watch this one to see if it can stay at least flat to positive. Facebook, just stay long. We did the VIX. KMX, CarMax, or Kinder Morgan. Nothing here yet. Oops, I think the bear is back. KMI, nothing here yet. Probably wouldn't be long or short this one right now. Just nothing compelling at this point. ELTR, bullish engulfing and bullish Harami. This one you can start buying on positive trading. Up here is where they need to fill the gap. So that's what your price movement will be, is probably back up to that level. VA, stay long as it stays above the T-line. McDermott, probably wouldn't be long or short right now. You can't be short because it's below $5. If I owned it, I would have closed it out yesterday or Friday with it closing back below the T-line. Nothing on this trend that tells you there's anything to get excited about. And ACAD, get ready to short this one. You can see the T-line crunch, and then it failed at the 50. So if you're shorting it, just watch to see what it does at the 200-day moving average. Okay, I think we got them all. Yeah, I'm supposed to go up near the Slippery Rock area. Sandy found a table that she'd like, so it only takes a field trip to go get a table. All right, just watch what the markets do tomorrow on the open. They open it lower. This is what we're kind of watching for after this big evening star signal. If they break that level, we're still heading down. That's right. I need a bull in the yard. Okay, everybody, we will see you bright and early in the chat rooms tomorrow. Again, if we wake up and the pre-market futures are down, start adding some more short positions. We might have another big downdraft ready to be in progress. Okay, we'll see everybody in the morning.